What is that? They said it's the, yeah, I'm preparing just in case there's a shortage of banoffee pies. Yesterday afternoon, if you were in the room early, you would have heard us talking about how there's been a run on some of our exhibitors, bits and pieces that they have at their desks, their giveaways. It was with some great sadness that we mentioned that Geo had lost all of their pens to people out there, their entire year's supply, in fact, in the first 4 hours of the day. I have 3 here. Does anyone want a special gold pen from Geo? Anyone out there that said, up the back? And we thought, oh, I missed out and I would like that. I also managed to procure the last 3 gold bars from the ABC refinery for today. Would anyone like a chocolate bar? Oh, up the back there? Okay, we'll come up there. Oh, and one down the front, chocolate and chocolate. Oh, you want the third one, do you? I'll give you the third one. That's all right. You've got blooming so many, it doesn't really matter. Now, our first speaker in the next, a gold bar. No, you can't. You can have a pen, Terry McMahon. There you go. You're too slow on our chocolate uptake. So our first speaker in this session today is an interesting fellow. He hails from Western Australia, over where I am. I've got lots of official things to say to him, but before I get to the official things, as he's walking up, have a look at his stance. Oh, Tom Bradbury's got some more pens. He's not a bad cricketer. He's also not a bad doubles player. So for you, those of you who know Jackson, who's one of our organisers here, who's the gentleman over here who would like a pen? There you go, sir. That's all right. And I think Tom's just sitting up the back there, and if you see Tom waving, he has got the final few pens there, and he's protecting them, but he will share them with you. So he's made his way up here. Keith Coughlan, cricketer extraordinaire, tennis player extraordinaire, but he's here today in his capacity as the executive chairman of European Metals Holdings. So we're looking at the state of play of lithium mining. This man is an expert in that field, as well as the first 2 that I mentioned today. He's got more than 30 years experience in mining finance and advising resource companies on projects covering most metals and commodities across many varied jurisdictions. Would you please make Keith welcome today as he talks about European Metals Holdings?
Well, thank you, Chrissy, for that very interesting introduction. So as Chrissy says, yes, I do want to chat about European Metals Holdings, our Cinovitz lithium project in Europe, in the Czech Republic. It's a globally significant lithium project for a number of reasons that I'll touch on during the presentation. First thing I want to just mention is that I was thinking about this today in the lead up to this presentation. I understand that I think it's a bit difficult here in Australia to understand what's really happening in the electric vehicle world globally. And that's largely because, you know, Australia's a slow uptaker of electric vehicles. And I think there's a few reasons why. You know, firstly, we're a very big country by land mass with not very many people. Electric vehicles require a lot of infrastructure. Rolling out infrastructure on a per capita basis is an expensive exercise in a country like Australia. So I think Australia will continue to be a slow adopter. But where we're operating in Europe, exactly the opposite is true. You know, you've got a much smaller land mass with a hell of a lot more people. You also people don't travel great distances, so we don't have this problem of range anxiety. You know, how far is my EV going to take me? And it's probably for this reason that the supply-demand equation for lithium in Europe is as strong as anywhere in the world. It's stronger really than anywhere else in the world. You've got a region that's going to consume more lithium in the next foreseeable years than anywhere else in the world, and they don't have any. They don't produce any lithium whatsoever. So projects like ours are very important. Also, I came back from Prague on Friday, first time I've been there for 2 years because of COVID. And obviously what's on everyone's mind in Europe currently is what's happening in the Ukraine. And one of the knock-on effects of what's happening in the Ukraine is a shortage of energy right across Europe, gas in particular, and oil to a degree. Excuse me. And this has focused the EU's attention and all of the European government's attention on energy security, which translates to mineral security as well. You know, the European Union's committed €1 trillion to the green energy deal, that is electric vehicles, batteries, and what have you. And yet China controls over 80% of the lithium in the world. So it's not great business for the EU to commit €1 trillion to a project and then have to rely on China for a key ingredient in that project. And for that reason, the EU is very, very focused on having projects like ours come into production. And this is very handy for us. Sorry, I shouldn't skip over my disclaimer so quickly. A couple of key differences to most of the lithium stories you may be aware of being Australian investors. You know, we're all very familiar with the Australian spodumene concentrate producers producing a con that is shipped somewhere else for processing, generally China, and turned into battery grade chemicals there. So ours is a different project. It's fully integrated. We're going all the way through to battery grade lithium chemicals, and that's a very important distinction. So we can produce battery grade lithium hydroxide and or battery grade lithium carbonate. We've done both of those things. It's a very, very large deposit. It's the largest hard rock lithium resource in Europe, over 7.5 million tonnes, or sorry, nearly 7.5 million tonnes of lithium carbonate equivalent, for those who know what that means, but I've got a slide to demonstrate that in a moment. We're at a DFS stage. Our PFS, as you'll see on the screen, returns some very attractive numbers. After-tax NPV for the project, nearly $2 billion US, and an after-tax IRR in excess of 36%. And that's based on a lithium hydroxide price of $17,000 a tonne, 17,000 US a tonne. I think the lithium hydroxide price today is closer to 70,000 US dollars a tonne. So obviously, if we plug in a higher hydroxide price, it's going to have a significant impact on those numbers. We've got very strong partners. We're fully funded through to our final investment decision. Very, very strong ESG credentials in the project, which is becoming increasingly important for all mining projects everywhere else in the world. We're building a world-class team there, along with our partners who are effectively the Czech government in country. And as you'll see from our share price chart, we've got a market cap there of about, I actually think it's less than that today, about $220 million. That represents less than 1/6 of our share of that MPV. So I'm fairly confident in telling you that I think this is probably the cheapest or most undervalued lithium development story listed on any share market. I mentioned that the EU has made a massive commitment to this industry. Fair to say they are all in. You can see some of the numbers there, some of the commitments. And the commitment isn't just about money. There's also policy commitments, that is subsidies to buy EVs, but also at the other end of the scale, penalties for OEMs, for car makers who don't meet emission standards. And this is obviously a very big deal, particularly in the EU, particularly in Germany, where you have Volkswagen dominating the market. And we're all aware of what happened to Volkswagen a few years ago with their emission scandal and the massive fines that they faced. So policy is positive policy, i.e. here's a subsidy to buy an EV. Also policy in regards to government and EU expenditure on rolling out infrastructure, and the other end of the scale, negative policy in regards to penalties. I'm not sure if any of you heard John Forward's introduction yesterday. He talked about a molecule crisis, saying basically the world's out of all commodities. And that's particularly true of lithium and particularly true in Europe, which, as I say, is very much driving our thematic. And the reason why is this is what's happening with the sale of new vehicles in Europe. So these numbers are from March, 2 months ago. 46% in Germany, 46% in France, 52% in Europe, in UK. And that is 52% of every vehicle sold in the UK in March was an electric vehicle of some description. And you can see the numbers there on diesel, you know, after what we've read about with regards to diesel over the years. So, you know, the take up of EVs is massive in Europe. EVs need batteries. Those batteries need lithium. It's a fairly simple thematic. Norway's the pin-up child for electric vehicles in Europe. 92% of every vehicle sold in March in Norway was an electric vehicle of some description. Yeah, it's not a very big market, but it gives you an indication of where this is all going. So these are the forecasts out to 2030, 39 million electric vehicles to be produced in that year in, 39 million vehicles in total to be produced by 2030 in Europe. That requires a lot of lithium, and that lithium doesn't currently exist. It's not even forecast on any forecast you want to look at. All the production of lithium out to 2030 doesn't include enough lithium to produce all of those vehicles. So here's the situation with regards to a key battery chemical, lithium hydroxide. The metal it's currently in deficit. It'll continue to be in deficit for as long as we can see, for as long as RK Equity here can see. And that's obviously leading to this supply-demand squeeze and the prices we're currently seeing. So I mentioned that Cinovix was a very large deposit. If you put together all of the hard rock lithium deposits in the EU, added them all together, our project accounts for more than 65% of that total. That's important for a couple of reasons. Firstly, it goes to long-term security of supply, but more importantly, it means that the EU is focused on helping us bring the Cinovix project into production, and that's very important. Having that tailwind in the form of financial assistance, in the form of permitting, messaging, and all of these sorts of things is very, very important when you're bringing a project into development anywhere, but particularly somewhere like the EU, where there's such a focus on ESG, quality control, et cetera, of all projects. So in the last few years, there've been a huge number of battery factories built in Europe and being built currently. And this is now becoming a very, very busy map. When I used to put this chart up, when we started doing this 6 or 7 years ago, there might be 2 or 3 names on this chart, on this map. And you can see now how many there are. If you add together the battery capacity of every gigafactory on this map, and this is currently built in construction or advanced planning, it'll need more lithium, 25% more lithium than was consumed in the entire world last year. So again, gives you some idea what the supply-demand equation really looks like. That gold star is our project right in the middle of it. So we really couldn't be better placed. I mentioned the ESG credentials. These are very important, becoming more and more important. Cinovix is a historic underground tin mine. In fact, they've mined tin at Cinovix for nearly 600 years, off and on. And that's something I think we don't really appreciate in this part of the world. The mining history of Europe is long and strong. But from our point of view, re-entering a historic underground mine is clearly a lot easier than permitting a new project or trying to dig a big open pit. And that's why, I think we'll have a much happier path in the permitting scene than we've seen with some other European projects. Things like underground electric mining fleets. Our partner, CEZ, the Czech power utility, produces all of the electricity in the Czech Republic. They've committed to providing solar power for the Cinovix project. So there again, it has a big impact on our ESG credentials and our CO2 footprint, which are all becoming more and more important. We had an independent LCA, that's a life cycle assessment conducted by a company called Minviro last year. And as I said, this whole ESG thing is becoming so important. These guys are one of the leaders in the world in putting these together. We've got, if you look at the second bar chart there, so that's our optimized base case of what our global warming potential, GWP, which is the term they now use. So the global warming potential of Cinovix versus brines, Chilean brines, Australian spodumene, et cetera, et cetera. So you can see Cinovix has the potential to be one of the best projects from an ESG perspective of any lithium project anywhere in the world. And that's not only important to us, not only important to our investors, but it's very, very important to the people to whom we'll ultimately sell our lithium. So if you're Volkswagen, you're building an electric vehicle, you're assessed on the entire supply chain of that vehicle from an ESG perspective, from a global warming potential perspective. So if you can buy lithium from us with this sort of a GWP profile versus somewhere else in the world, there's clearly advantages in that. I mentioned very strong strategic partners. CEZ, our project level partner, is a publicly listed company with a 21 billion euro market capitalization, who are 70% owned by the Czech government. They've been operating in the Czech Republic for 20 plus years. They've built mining projects, they've built processing plants, energy plants, etc. So no one really knows more about permitting these things and getting things done in the Czech Republic than they do. They've traditionally been a burner of brown coal, moving away from that, obviously, as the entire region is. They now have interest in wind farms, solar power, nuclear power. Their green credentials are very strong. As I mentioned, they'll provide solar power to the project, which is very advantageous to us. EIT is a branch of the European Union. We have a collaborative agreement with the EIT, so effectively with the European Union, which they help promote the project, help us finance the project, get it into production, and help us with offtake discussions. This is a summary of those PFS highlights that I mentioned. It's a very, very strong project from an economic point of view. And in fact, the hardest thing we had to do in summarizing our PFS was to work out what lithium price to plug in, given how strong it's been and how quickly it's been moving. So as I say, this was based on 17,000 a tonne, and it's now in excess of 70,000. And I'm just about out of time. What we have to do going forward. So the key thing, and this is any of my shareholders here will tell you what they really want me to do is to sign an offtake agreement, because we've all seen what that does to the share price. We will do that. It's been advantageous to us in not doing it too quickly because the terms are just getting better and better. Off-takers are now prepared to give you terms that they simply weren't prepared to give you 12 months ago or 6 months ago. And I think that will continue for some time with the supply-demand equation. Very quickly, board and management, and this is our team. This is enhanced by our partners in-country team. They employ 35,000 people in the Czech Republic. Very, very handy clients for us to have. This is quick. This is a short version of our presentation. Longer versions on the website, or please come and see me in booth number 11 if you want to learn more. Thank you very much.
Okay, thank you very much. I almost didn't even look at the time. I was so engrossed in the actual presentation. So you got me. Well done. A couple of questions to ask you later. First one is, what is an Aussie doing all the way over in Europe? Heading this project, I'll be asking you that question. How did you get in there? How did you get so clever? And can we follow you? Right, a bit of a difference for our next presentation. Our speaker is based here in Sydney. However, said speaker is currently in the US. His team, however, is here in the room with us. And Nick Lindsay from Lake Resources is going to come up, join us on the stage, and he's going to explain the finer details of how this is going to work. Nick, come on up. Please make him welcome, everyone.
Good afternoon, and it's good to see a really good turnout this year at the Roundup. I haven't been here for many years. I'm very pleasantly surprised. Lake Resources is presenting today with our Managing Director, Steve Promnitz, has had to head off to the States and he couldn't take the presentation today, but there is a video recorded and we'll run that just now. After the presentation, we have a booth around the corner here, and I will be available for people to come and ask questions, and I'll be here tomorrow for the same. Okay, we have an exciting project. We're doing things a little bit differently. We're being driven by environmental concerns, social concerns, like many projects, but we've taken it in a direction of technology to replace methods that have been used for many years but are now becoming obsolete. So are we ready to go up, roll? Okay, thank you.
Now, I'd be okay because I can actually lip read. That's one of the benefits of being deaf and wearing hearing aids. I'd be fine, but the rest of you are slightly buggered up. Whereas I'm slightly buggered up when you all put your masks on. Right, let's
Good afternoon and welcome. My name is Steve Promnitz. I'm the Managing Director of Lake Resources. Lake Resources listed on the ASX, LKE, and also in the US under the OTC symbol of LLKKF. We're doing something quite different in the lithium space. We're developing large, scalable lithium brine assets, and we're doing that using new technology. Now, I will be making forward-looking statements. These are on the next slide, showing the disclaimer. So please be aware of that. But essentially what we're doing is something fundamentally different. And we set that out on slide 3 of our presentation. that were released late in April to the ASX. And that is that we're producing a very high purity, low impurity, consistent product. And that's the sort of product that new batteries and new cathodes need. They need a very high quality, consistent product. And the end user wants to see meaningful ESG benefits, not just a few percent. We can deliver orders of magnitude reduction in water usage, orders of magnitude reduction in land usage, and a lower carbon footprint. But to do those things, you've got to use a new technology. The traditional methodology of extracting lithium from brines just doesn't deliver that high purity product, and it certainly doesn't deliver those ESG benefits. So for that reason, we partnered with a group called Lilac Solutions out of California over 4 years ago. They use a very common water treatment process called ion exchange. It's so common, it's in the corner of my coffee shop. 60% of uranium is used in it. More than half of the water treatment plants around the world use ion exchange. All they did was adapt it for lithium. We're on a very rapid pathway into production, and in the second half of 2024, large project that's scalable, debt funding for more than 70% of the project, long-term low-cost debt from export credit agencies and their respective banks. And now we're finalising our MOUs with the offtake partners so that we can become an independent producer at scale. So we're going to summarise this in our next slide. So what does that look like? Well, first of all, we're in Argentina. The large scalable projects for lithium are in Chile and Argentina. And with what's been happening in Chile recently, Argentina is actually the go-to place. We don't just have one project, we've got 4. Our flagship project is Cachi. It's just down the road from Livent's operation, which has been operating now for the longest time, 25 years, since 1997. And we also have projects that we're ramping up, Cauchari, Olaroz, next to current producers. Next slide, please. Now, we released a pre-feasibility study on our Cachi project back in 2020. This is what the project looks like. If you've seen one of these brine projects, they all look pretty much the same. It rains once a year, once every 5 years, nothing much grows. The trick to it is the lithium-bearing brines that are beneath the surface. Next slide, please. And in that pre-feasibility study, we showed how we could produce 25,000 tonnes per annum and do that very cost effectively. In January this year, we upscaled that base case up to 50,000 tonnes per annum. Now, that level, that will make this one of the largest projects in South America. Next slide, please. That DFS will come out in the 3rd quarter this year, and this is basically what the project is going to look like. At the front end, in letter A on the right-hand side, that 20, 30, 40 square kilometres of evaporation ponds is reduced down to one warehouse with ion exchange modules. And then the rest of the project is pretty much the same as what you would see elsewhere. Just converting that lithium chloride into lithium carbonate, that back end of the plant, it's the same as what you would see elsewhere. So in summary, the flow sheet we're putting in place is essentially the same as what everybody else uses, but we replace those evaporation ponds with the ion exchange columns, and we're doing that using a very well-known methodology just adapted for lithium. Next slide, please. And so as a part of that, naturally, not only do we need the financing, but we need to have the right offtake partners. We've spent time talking to electric vehicle makers, battery makers, cathode makers. And so to that end, we're using Hanwha out of Japan, essentially to front Japan Inc., the battery makers and EV makers there in Japan. We'll talk about that later when we can do so, but suffice to say, they're all A-rated, so that's good if you're going to put debt into the project. And then separately, we were talking to Europe and to North America, and as it's turned out, a Ford company has come out of the blocks, and they're very keen to take half of our project. Now, we will be able to say more of this. We are in discussions, so I am limited to what I can say, but suffice to say, these sorts of counterparties are only talking to us because we've got a very good quality product that's at scale with meaningful ESG benefits. Next slide, please. And so we've spent the time, we've spent the effort testing this brine using this technology. More than 4 years now, 18 months at benchtop scale, more than 2 years, the pilot plant operating in California. In the coming weeks, we're going to have a demonstration plant on site, but we've shown that you get high recoveries. We're talking 85, 95% recoveries instead of 45, 50% using traditional methods. It's fast. We can come to market now, which is when the market actually needs this product. We can do that sustainably and cost effective. Next slide, please. And so as we move through this process, we're going to have the demonstration plant operating on site. It's 4 or 5 40-foot containers. Inside those containers is the ion exchange modules of Lilac. And the beauty of this is essentially now a plug and play process. Previously, we had these things set up. Now, because we've got them containerized, they're tested before they come to site. And what you see here, when we get into production, there'll just be 40 or 50 of them at full production scale. That's the beauty of this process. Next slide, please. Next slide, please. And the beauty is that it produces a low carbon footprint because we're using solar, low water usage, low land usage. This is order of magnitudes better. We can deliver on sustainable development goals. The end user of electric vehicles wants to see that we're not repeating the sins of internal combustion engines. And I'm sorry to say, even though we need all the lithium we possibly can, at the moment, most of that hard rock product goes off to East China to get processed. So it has a very large carbon footprint. And further, all of the brine producers actually produce a high quality product on site. Look, we need all of this, but the beauty is this product actually stands out in a beauty parade. Next slide, please. And to that end, that's both why we've got good economic metrics and good financial backings. So the metrics here are at 25,000 tonnes per annum. And I want to caution you on that, 25,000 tonnes per annum. Our base case is now 50,000 tonnes per annum. We haven't released those numbers yet. The capex at $540 million US, a cash cost of $4,100 a tonne, an EBITDA line of $260 million using $15,000 a tonne. Now, if we were to double that, that EBITDA line is around 600 million US per year. If we increase the lithium carbonate price to $30,000 a tonne, that's now more than $1 billion US every year for 25 years in the EBITDA line. The capex number, we've had brokers estimate that somewhere between $900 million to $1 billion. Our cash costs come down, both because we're using solar and scaled up the project. So this really starts to produce some serious money. We can produce our market cap every year or every 2 years, the way things are currently progressing. Next slide, please. And part of the reason that we can do that is because of our low cost of finance and the fact that it's durable and reliable. 11-year debt priced all in around 3%, possibly 4%. That's because the export credit agencies in the United Kingdom and Canada want to support this product and want to be seen to be supporting this project. And now we've got some of the large global banks, and we'll be making announcements, and some of the large global banks actually backing us as well. That's the key difference. So we don't have to go out and rape and pillage the equity markets and try and raise the money. That is primarily going to come as long-dated debt. And this is an increasing interest rate environment. So this really makes this project work. Next slide, please. So our timeline is that in the next quarter, Q3, we'll deliver our definitive feasibility study, our environmental social impact assessment. And then together with those offtake agreements I spoke about, that'll then trigger the debt financing and get this thing underway. Entirely separately, we're going to have the demonstration plant running on site. That'll deliver product for the end users and also be able to tweak the engineering so that then we can move to construction indicatively by the end of this calendar year, or if not, very early next year. So things are progressing very well, and we're aiming to be in production second half of 2024. Next slide, please. And that's one of the beauties of these projects. They scale up quickly. So to that end, that's why we're now looking at getting the next project up and running, and the one after that. We drilled Calchari back in 2019, which you see in this image, and we demonstrated that we found the same brines down next to Matsa. We're drilling Olaroz at the moment, and I would be very surprised if we don't demonstrate again the same brines. So this is not a one-trick pony. Our aim is actually to become a 100,000 tonne per annum producer by the end of this decade. That will make us one of the top 3 global lithium producers and the largest on the ASX. And the way things are tracking, I think we can well and truly deliver on that, and perhaps then some. That's why we spent the time getting the right bankers, the right debt providers. That's why we spent the time getting the right offtake partners. Next slide, please. And at the end of March, we had 110 million Aussie at bank. We aim to have another 60 million or thereabouts, because the options are deeply in the money that are coming due by middle of June. And so let's say that's 160, 170 million in a couple of months' time. Our technology partner, Lilac, is going to put another 50 to 70 million US towards this project. The offtake partners will probably put some money towards it as well. If we need to do a couple raise, we might raise 50 million US. That'll help us pre-order things. But this project is pretty much financed. We're a market value of a bit under 2 billion US, and I'll be very surprised if we don't increase that as we deliver on our goals over the coming months. Next slide, please. So in summary, we're going to produce a high purity lithium, pretty much unlike anybody else in the industry. And we're going to do that with major ESG benefits. And that's why we're able to get the right offtake partners, the right debt supporters, and the right equity supporters. This is going to be an independent producer at scale. And that's because we've done the test work on the new technology. We've been at this now for 6.5 years, more than 4 years on new technology. They are the key things. You've got to do the test work. You've got to put in the effort, but this is going to deliver. And I thank the shareholders who followed us to here. And as we move into the ASX 200 in June, we're going to have more of the funds following us globally. And so I thank you for the opportunity. If you need to email me, steve@lakeresources.com.au, but please click on our website, lakeresources.com.au. This is really something to look at. With where lithium prices are trending, all lithium stocks are going to do well. But when there's some nervousness in the market, these are the sorts of companies and projects that will continue to do well because of the quality of their bankers. Thanks so much for your time. We'll talk soon.
Thanks, Steve. And yes, you can email and you can contact me directly, but you do have, you have the boys. So you have Nick and Gabby here. They're straight outside the door and to the right-hand side. So if you want to go and talk about this, discuss this further with them, as Nick said earlier, he's happy to have a chat with you over the course of the next day or so. Steve, Lynn, could you please come and join us, sir? We're talking Cannon Resources next on stage. Western Australian nickel explorer and developer, Cannon Resources is making a name for itself with its Fisher East project in WA's Goldfields region. They have a maiden resource on the Sabre deposit and a total resource upgrade of 49% so far this year at Fisher East. So they're now sitting on 116 of nickel, 116? Yeah?
Yep.
Slightly strong growth upside.
116,000.
Yeah, 1,000.
116,000.
Wow, okay. This is the CEO, Steve Lynn. He's going to present the Cannon story and he's going to explain further resource growth potential.
Thank you. Thank you, ladies and gentlemen, for your attendance. I used to work with Steve, the previous speaker, in Argentina in the early 90s. So, yeah, hadn't seen him since. So Cannon Resources is a West Australian focused nickel explorer developer. We've got 2 projects in Western Australia. We're rapidly developing our main one called Fisher East, and it's looking quite exciting, and we plan to grow it rapidly from this point on. So I'll start it. So our disclaimers, you should read these at your convenience. So investment highlights for Cannon. We're a nickel-focused explorer developer. We're solely focused on nickel. We're in class 1 nickel, which is sulfide nickel above 1%, and high grade that is. And we're also in a tier 1 jurisdiction. We're in Western Australia, and we have certainty of tenure, all those sort of things. We've got a lot of upside on our project. Our project is highly scalable. All our deposits are completely open laterally. They're also open down plunge. We also have a fairly good infrastructure advantage as well, because we're 115 kilometres from Nickel West's operation at Leinster Mount Keith, and Cosmos is in that area as well. So there's 3 concentrators within 115 kilometres by air. By road, which is how we would transport if we were toll treating, it's about 200 kilometres. That gives us development options when we get to that point. So we're in a new nickel belt. We have 100% of the tenure there. The prospective rocks are all within Cannon's tenure, and we've got complete control. So we're 100% ownership of the tenements. There's no joint venture partners. There's no other arrangements. It's 100% owned, and very attractive market capitalisation. So currently we're $32 million Australian on the ASX. So company snapshot is we've got 85 million shares on offer currently. We're got a market cap of what is it? Currently it's, finding it hard to read without my glasses on, $32 million. EV of around about 27 million. We've got about just under $5 million in the bank, and share price performance this year has been fairly stable. We're sitting in that high 30 range, been there all year. So hopefully that'll go high, a lot higher. So the board and management is myself. I'm a geologist by training, exploration geologist, and a lot of experience in geology. Been an exploration geologist for 25, 30 years. Management as well. Trevor Benson is our chairman. A lot of you will know Trevor. Trevor's had a lot of experience in investment banking, finance. He's chairman of Ionic Rare Earths as well, a couple of other companies. Alex Passmore is also a non-executive director. He's managing director of Marsa Resources. He comes from a geology finance background. And Richard Bevan's our other non-executive director, and he's ex-Cassini Resources managing director. He's currently chairman of Kili Resources and Naria Metals. So a lot of experience. So our strategy at the moment, we're currently exploring our projects, exploring and developing our resources. We'll continue that work. We'll also do, this is at Fisher East, we'll also do some early work at Kolyarabi, some drilling later this year. And we'll end up doing some metallurgical test work at Fisher East as well. We'll manage to fit in a few holes for that. For next year, we need to convert our resources to indicated to assist our scoping study and feasibility work. And we'll also continue exploration, obviously. And then we're looking for 2024 to finalise the feasibility work and have a decision to mine. So our current resources, Fisher East, we've got 6.4 million tonnes at 1.8% nickel for 116 kilotons of contained nickel. This is class 1 nickel sulfide. We have a very focused exploration program. We're currently drilling there right now, diamond drilling right now. We have 4 deposits there at Fisher East. They're all on the same contact. They're Cambalda style nickel channelized komatiite flows. And we've had a lot of success in the last 6 months or so, where we've got a maiden resource at a prospect called Sabre that was announced about a month ago, and we've also had a resource upgrade at our deposit called Muscat. So at Collierabby, we have a different style of nickel mineralisation. That's a intrusive style. That's more akin to Julimar, Nova, Savannah deposits in Western Australia. That is at a more early stage of exploration. It's a smaller scale at this stage. We have about 15 kilometres of strike there. Lots of indications of mineralisation and plenty of upside, but at an earlier stage of exploration. So looking at Fisher East, we've got 4 resources there. They're all on the same contact. It's a komatiite lava sitting on the base, sitting on some sediments that's now been overturned and inverted, so it's upright. They all plunge down into the ground. They're drilled to various phases, but they're all completely open at depth, down plunge, and to some extent laterally along strike. So they all range in grade between Camelwood, for instance, is 2% nickel. Cannonball is 2.8% nickel. Muscat is 1.9% nickel, and Sabre is 1.4% nickel. Looking at Muscat in particular, the resource there is 2.4 million tonnes, 1.9% nickel, 45.5 kilotons contain nickel. We've drilled that deposit down to 600 metres, deepest hole. On that diagram there, all the holes are shown. There's no other holes. So there's a lot of areas around the deposit that don't have drill coverage. And it's quite a wide channel. It's 450 metres wide. The thickest intercepts are around about 16, 17 metres thick, and that's in that dark pink colour. That's where the indicated resource is. It's purely a function of drill density. We need about 50-metre drill spacing to get it into indicated. The rest of the deposit, it's around about 80 or 100 metres, and that drill spacing would need to come down to get it in indicated. So that's in inferred currently, the lighter pink. It's dipping towards away from the screen at about 65 degrees, and it's plunging semi-vertically on that dip. So the mineralisation is high tenor nickel sulfide. There's a high deportment of pentlandite in the sulfide species, and that gives us very high grades when we get massive sulfide. So massive sulfide at Muscat is around about 20% nickel. Highly desirable, obviously, and the disseminated zones are around about between 1 and 5% nickel. So, and critically, the whole thing is open, completely open down plunge, vertically and laterally and internally. So just a look at the mineralisation, that's the komatiite there. We've got a fairly consistent grade profile down there. Where it goes semi-massive, we get the high grade. So that zone there is where it's semi-massive, and that's the samples there. So this is for those people that don't know what this is a tray of NQ core. Each row is just under a metre in length, and the sample is from there to there, and it's running 4.9%. It's because of this little zone there. So what we're doing here is we've got a drilling program currently underway. We're looking in those areas in blue. I've highlighted the areas that I think that we can expand the resource into as blue coloured there, and we're currently doing a drilling program. Those red circles there, the current drill holes. This has just got underway, so we're on the first hole already, and it'll take about 2 to 3 months to complete that work. The idea is to find out whether we've got any extra resource in the sub 600 metre level, and we're targeting all of those holes are outside the resource. So you know, the success will be new resource if we get that. So as I said before, the resource is completely open at depth as well. We're doing this work to have a better understanding of the grade and high grade zones and thicker zones, and then follow those down at depth later. So going on to the Sabre resource, which is about 6 kilometres on the same contact further south from Muscat. It's a resource of 1.8 million tonnes, 1.4% nickel, 24.5 kilotons of contained nickel. We've drilled this down to about 300 metres only. It's a very large channel. It's a separate channel, but a very large one, 700 metres wide. It's got a much shallower plunge. It's around about 56 degrees plunging to the north. The drill spacing here is a lot wider. It's about 80 metres in most of it. It's still open down plunge, but it's open internally as well. So why I'm emphasising this one and why we're doing work at Sabre is because we feel there's a lot more nickel mineralisation within the Sabre system. And what we're showing there is a air core program where we drilled over the top of it. We got very high grade PGE, platinum group elements, platinum and palladium, very high numbers there, and it was very poddy. There was 3 main pods. Our interpretation of that data was that was showing us where high grade zones within the mineralisation were, and then plunging down. So that central one, we were fairly confident that was correct. There was high grade hits in there, and we followed that. What I did is I showed in blue again those areas that we thought were prospective and worth investigating. So to that end, we designed some drill holes in those blue areas exclusively, essentially. All those holes have now been drilled, and we've released results from the first hole, which is that one there, and we had 5.7 metres at 2.6% nickel with about a 1.1 metre intercept of massive sulfide. So the theory of the high grade zones within the ore body looks like it's pretty good, and we're following that up rapidly. So quickly, Collier Abbey, that's shown there. We've got a mineral resource at Olympia, much smaller in scale, 500,000 tonnes, 1.6% nickel. We've got about 15 kilometres of strike, multiple drill intercepts, and a lot of upside there. So concluding remarks, exactly the same. You know, we're in nickel, a lot of upside, infrastructure advantage. We're in a new nickel belt. We have it 100%, and we're very attractively priced. Thank you.
Thanks, Dave. Stephen from Cannon. Matsa Resources is next up on stage. Matsa is a highly active gold exploration company advancing the Brownfields Lake Kerry Gold Project in Western Australia. 2 significant recent events for Matsa were the sale of Red October and Devon mines and the recommencing of exploration in Thailand. And meanwhile, over at Lake Kerry, Matsa is going to retain significant ounces after the sale. Exploration will continue with an exploration target of 666,000 to 1.36 million.
Mm-hmm.
You're optimistic little team, aren't you?
Optimistic, yeah, you've got to aim high.
This is the Executive Director, Pascal Blampayne, who's joined us. Would you please make him very welcome?
Ladies and gentlemen, thank you. Good afternoon. Yes, the Matsa story, it's changing a little bit since this time last year. A couple of key developments, and I'll take you through those over the next few slides. Our target really still is in Lake Carey to generate a resource of over 1 million ounces that will support a business case to build our own mill. And I'll show you how we'll get to that shortly. Corporate overview, you can see there our directors and our board and management team. We have 553,000 ounces in resource at just a shade under 2 grams, 1.9. Our share price today is around about 6.5, 6.8, as opposed to the 7.1 there. 358 million shares on issue, and we've got a market cap of around about 23, 24 million. Dirt cheap, and I'll tell you why shortly as well. 55% of the ownership is in the top 20, and we're very well supported by BNP Paribas and Deutsche Balaton, with some German and Singaporean shareholding. So 2022, it's a reinvigorated Matsa. There's a couple of key developments, as was alluded to earlier, just as I walked up on the stage. And these being, the first of which is the sale of the Red October mine, and we're along with a small package of exploration ground for $20 million. Now, Red October, we bought that for about $1.8 million, including a camp, which we have retained. That $20 million sale, we expect it to settle during the first week or so of June. Out of that 20 million, we've received so far $2.5 million non-refundable deposit, expecting another $500,000 later this month, around about the 25th. And then there'll be a deferred payment of $5 million within 24 months of the settlement of the transaction. So this will be a significant injection of cash into the bank balance, which we'll use for exploration purposes. And by around about mid-June, when a final settlement completes, we expect to have about $8 million in the bank, and we'll have $4.5 million in non-escrowed shares in the new IPO listed company, Lynn. On completion, we'll still have 553,000 ounces, as I mentioned just before, centered on the Fortitude gold mine. And we have 385 kilometres squared of prime land in Lake Carey. The other key development is Thailand. Now, we've been in Thailand for over 10 years, but in 2016, it was just as we were starting to drill one of our key copper projects there. There were, I guess, mining and political sort of issues that started to become unfavourable in terms of the landscape for exploration and mining. And so what we did there, we just pulled back and decided to keep a minimal sort of profile and in terms of expenditure in Thailand, whilst we retained the skill sets, the office and team, but in particular, we actually retained our projects there as well. So with Kingsgate now advising that they expect to get back into production, pour gold by the end of this year, one of the very favourable developments there. Pan Asia Metals also drilling extensively down at Rung Kiet, indicating fairly good support from the government for exploration and mining to I guess, expand a lot, considering where it was 2 to 3 years ago. So with that in mind, and the fact that we already held some decent some decent projects in Thailand, we've decided to go back and do a little bit more work there as well. What does this all mean for Matsa in itself? So when we signed the agreement to sell the Red October gold mine to Lynn, we sold 314,000 ounces at a price of $64 per ounce. Now compare that to our existing situation at the time. We were around about $21 million market cap, 867,000 ounces on the resource, and that equates to around about $27 per ounce enterprise value. So essentially, we sold the ounces at Red October and Devon exploration area for a premium of about 237%. We've always maintained the value of Matsa, and in particular, Lake Carey has been undervalued, and this really supported what we were thinking all along. Now, what's of real interest and why I said that the share price of Matsa is very, very cheap is that assuming very little share price movement between now and middle of June when this settles, we'll have 553,000 ounces of resource. We'll have nearly 17-ish sort of $1 million in cash and receivables. And that will equate to around about $16 per ounce enterprise value. Very, very cheap. What are we going to do with the money? Obviously, we're going to spend a fair bit of it in exploration, and a large lion's share of it will go towards Lake Carey itself. So the pro forma sheet, once the conclusion of the settlement occurs, you can see here our land package. We're centred around the Sunrise Dam, Anglo Gold Ashanti. To the north, we have Granny Smith and Wallaby with Goldfields International. And we basically follow along a key trend of Fortitude shear zone coming up through here. And that's the focus of our exploration going forward. Importantly, it's around about 60 kilometres of strike, 20 kilometres across. But in terms of the key structural features that we are chasing, it's probably in excess of 100 kilometres combined strike. As I said, we have 553,000 ounces in resource. The key initial target will be Fortitude North here, which is only about 6 kilometres north of Fortitude Gold Mine itself. So 6 kilometres north of the 500,000 ounces in resource. It's the same structure, same rock type, same style of mineralisation. So we think we understand that pretty well. At the moment, we've only got a couple of dozen sort of holes through that entire system. So there's not enough there to put together a JORC compliant resource. But what we have done is put a bit of an envelope around what we think is there. And at this stage, we've identified a potential 380,000 ounces there. So we're pretty confident that with a little bit of extra drilling, we can see that increasing to rival, if not better, the Fortitude deposit that we have just only 6 kilometres south of that. And then as we keep going with our exploration, we'll keep going up that trend up that way as well. Fortitude Gold Mine, you've probably seen this one before. There's 489,000 ounces in that resource. We've done some pre-feasibility sort of work on that. We've got a pit optimisation, which produces around about 136,000 ounces. And at a $2,400 gold price, this pit would produce $96 million in cash surplus. That's at a $2,400 gold price. As I mentioned, with today's gold price, that should be substantially better than that. So that pit would ultimately be 1 kilometre along and 190 odd metres deep. So we haven't got too much work to do to that to actually get it going. It's fully permitted. If we wanted to, we could start mining that now. Our biggest hurdle at the moment is we need a decent home for the ore to be processed. As I said, 553,000 ounces in resource. We're still targeting 1 million ounces, and I'll show you how that's going to be done. You can see here a whole bunch of prospects, key prospects. So the Fortitude shear zone extends up through this all the way up to north. Out to the west, we've got another shear zone, a splay called the Binder Shear. And then over to the east, it's less well defined at the moment. There's another shear zone there as well. So, and as I mentioned, nearly 100 kilometres worth of strike of prospective structure there. Some key drilling targets. You can see here our main targets all within around about 20 kilometre radius from from the Fortitude Gold Mine, which is where we would propose to locate a mill going forward. The money that we're going to get in early June, this is where we're going to spend it in terms of Lake Carey. We've got a 40-odd thousand metre program scheduled and designed, air core drilling, RC drilling, and some diamond work there as well. And we'll be targeting the entire spectrum of the exploration pipeline from some resource definition drilling, Fortitude North in FF1. Then in the next section, we've got some advanced exploration work there on 6 or 7 targets. And then we'll be doing a fair bit of greenfields air core drilling to delineate some drill targets there based on geophysics works and some soil work there as well. What I might add as well, we've actually commenced our drilling activities now. We've brought that forward, and we've just last week commenced drilling out at FF1, Wilga West, the Hall Road, and also Phantom Well. We've just got the assays expected of those over the course of the next few weeks. I'll just move along there to running out of time, sorry. Just a fair, you can read this at your leisure or come and see us at our booth. Just quickly, in terms of Thailand, our Lake Carey still will be our flagship project, but at Thailand, it's important that we don't neglect what we've got there as well. So we'll spend a little bit of time and do some value-added work on that. We've still got the copper and lithium, copper and gold prospects in central Thailand, but we've also added some tenement stuff to the western Thailand along the granite belt there. 942 square kilometres of prospective tin, lithium, tantalum ground. Just a quick snapshot of the tenement position all the way from southern part of Phang Nga all the way through up to Kanchanaburi, just directly west of Bangkok. So one of the key things about this granite belt is it was mapped in the 1980s and 90s by the British Geological Survey. And obviously what they did is they identified lithium in places, in particular lepidolite. Now in the 90s, that was of very little interest. We've gone and pegged ground based on that information. Phang Nga, we've just recently finished a first pass stream sediment sampling program that you can see there, all the yellow dots. We've sent that off for assay, and that probably will take about 4 weeks or so before we get those results back. And importantly, we've observed a bit of tin in our activities there as well. Kanchanaburi, just up to the north, looking interesting as well. And you can see here, lepidolite was mentioned in the documentation. Similar sort of thing for the central part. And then, as I mentioned here before, what's really important with regards to our copper project here is we've got some very good assays, 54.7% copper, and some very good silver in there as well. A very brief snapshot of the activities going forward. You can see there's fairly intensive activities, mostly centered around Lake Carey. We'll do a little bit out in Thailand there as well. And you can expect some news flow based on this time frame. Thank you very much.
Thank you, Pascal and Matsa. Moving along, our second 1, 2, 3 presentations to hear from this afternoon, and I promise you that will be interesting. Someone asked me what or where you could actually see the presentations. When I got up this morning, I had David Tasker open on David Tasker is the Managing Director of Chapter 1. I just happened to have that open on my LinkedIn, and he had all of yesterday. So there's multiple areas where you'll find all these talks, but he does have the ones that are closed captions at the bottom, just for those of us too. So if you're following LinkedIn, you'll find us there too, and just look up vertical events. You'll always find the presentations. All right. Let's go lithium again, shall we? Infinity Lithium Corporation are taken to the stage. They're based in Perth. However, they are progressing their flagship integrated industrial lithium project over in Spain. Europe's energy transition commitments, combined with its increased need for energy independence, has made Infinity's project strategic importance to the region greater than ever, and it sets the tone for MD and company CEO Ryan Parkin's presentation today, entitled Accelerating an Independent European EV Value Chain. Would you please make him very welcome, everyone?
Well, thank you very much for the kind introduction, Chrissy, and thanks to Jackson and the team for the opportunity to speak here today. If you might please observe the disclaimer. Look, my name is Ryan Parkin, Managing Director and CEO of Infinity Lithium Corporation, and we're progressing our flagship San Jose fully integrated lithium chemical conversion facility located in the Extremadura region of Spain. I've recently spent an extended period of time in Europe, and it's very clear from having spent that time in Spain and in Brussels, and against the backdrop of the tragedy that's unfolding in the East, that Europe is now rapidly moving towards energy independence well before their target 2030 goal. We've seen various statements from major business and political leaders, both at Europe and in country in Spain. And here we highlight some comments from the President of the European Commission, Ursula von der Leyen, really noting that significant investment will be required in this move towards renewable energies and energy transition. Europe will be moving towards a totally renewable future based on green hydrogen, photovoltaic and wind power. And ultimately, it is these geopolitical tensions that are leading to this accelerated change. We also couple that with some other pressures focused on the localization of supply chains, and we're all well versed in that on the back of COVID across any number of industries. However, within Europe, it's been a major focus from as early as 2019, when the Vice President of the European Commission, Mr. Maros Šefčovič, who leads the European Battery Alliance, highlighted the critical need for lithium raw materials and also the urgent need for lithium refining capabilities. The move to electrification is based upon this, and with more than 1,000 gigawatt hours in the pipeline in Europe, there's a real urgency now to make sure that they secure these key materials and the progress forward towards total energy transition. So just an overview of where we sit at Infinity Lithium. We are progressing one of the most technically advanced and integrated industrial lithium processing facilities in Europe through Extremadura New Energies. And we will be producing close to 20,000 tonnes of battery-grade lithium hydroxide per annum in the Extremadura region of Spain. We're also redefining a sustainable production profile through alternative technologies, and this is through Infinity Green Tech, our locally based company that's been focused on novel and innovative lithium processing technologies. We have the potential to revolutionise lithium chemical processing through an environmentally advantaged and low-cost process flow sheet that can access low-grade materials globally. A quick snapshot here of our board, some familiar faces. You've probably seen Adrian wandering around and Justin here over the last couple of days. But I'd really like to highlight the appointment of highly credentialed and experienced CEO Ramon Jimenez Serrano, leading as CEO of Extremadura New Energies, our fully owned Spanish subsidiary that is progressing the San Jose project. We're also benefiting from a highly experienced technical advisory team led by John Starrink there, who's been heavily involved in a number of lithium chemical conversion projects. Corporately, we've got approximately 415 million shares on issue and a market cap of close to 75 million Australian dollars, with $17.7 million in the bank. So the San Jose lithium conversion project is located approximately 3 hours west of Madrid, very easy to get to on dual access highway. And this integrated facility will be using Europe's second largest lithium feedstock located on site. It is truly a fully integrated project. We're using a proven and sustainable process that has been backed through EIT and O-Energy and European funds that has seen the recent production of both battery-grade lithium carbonate and lithium hydroxide. We are working closely with the local community to bring the benefits to the people of Cáceres, and we're now pivoting our project to not only move underground, but also benefit from Extremadura's vast renewable energy network. We're able to utilise the photovoltaic power to power the plant and various aspects of the mining, and also seeking to be in a global first, the first user of green hydrogen to power our kiln. So just a quick overview of our resource here. It's been in the market for quite some time. We're going to benefit from Europe's second largest hard rock lithium deposit with 100 million tonnes JORC defined, or close to 1.6 million tonnes LCE. This is a tin mine that was active in the 1960s. When you walk the ground, you can see the infrastructure, you can see the shafts, the head frame, dilapidated buildings. So this is a well-known project area. And in the late 80s and early 90s, further drilling was undertaken by a Spanish company, Tulsa Group. We've also undertaken drilling activities in 2017 to the point now where this resource is really known as a large homogeneous ore body. And we've recently pivoted our project now from an open pit to 100% underground extraction. We've made these changes in direct response to the community and have moved forward with our social licence through to permitting. The resource there will be accessed by a portal that is actually adjacent to the integrated processing facility. So approximately 1.5 kilometres from the actual resource area. This move underground facilitates the majority of waste returning back underground. And with that waste that remains above ground, it's really benign, it's dry stacked and allows for the continual rehabilitation of the site. There's no visual impact now from the resource extraction in the area, which is important for the community and also for our ESG credentials against the backdrop of a battery passport in Europe. So this is an aerial overview of the site. You can see some infrastructure there from the tin mine. Ultimately, from a community perspective, they can continue to use this area. There's going to be no visual impact, no noise, no dust, any other concerns that might have existed in the community. But also importantly, we're using wastewater from the wastewater treatment plant. There's no effect on the aquifers in the region and supporting the local community. Our process flow sheet is really driven through our technical advisory committee. Dr. Dave Marie, who's in charge of our process, and John Starrink. They've got extensive experience in chemical engineering and other lithium chemical conversion projects. So we're lucky to have them on board. And as our Dorf Naranza plan, we've been working collaboratively with them for a number of years. More recently, we've confirmed an upscale test work program where we have produced both battery grade lithium carbonate and lithium hydroxide to produce at a steady state close to 20,000 tonnes per annum over a 26-year period. This sustainable technology has been endorsed through EITNO Energy, a public-private company that utilises European funds. So it's really about moving forward in Europe with sustainable and new processes to provide the strongest possible carbon footprint and an ESG credential that will permit your social licenses. Importantly as well, we've signed a non-binding MOU with LG Energy Solutions and remain in discussions with a number of other parties for what is clearly going to be in high demand in the European landscape. Interestingly, our project as well, more than 85% of the CapEx is aligned to the downstream processing activities. So that's the beneficiation plant and the lithium chemical conversion. So this is truly an industrial project that has the opportunity to attract other industry and be aligned to photovoltaic and green hydrogen in the region of Extremadura. The process flow sheet itself, just to touch on it, we use a sulfate roast. We'll be using a glacerite in the kiln, a combination of a potassium and sodium sulfate, and using a water leach. So after the production of lithium sulfate, we're able to recycle those key inputs, which not only is economic advantages, but further adds to our environmental profile. We've already spoken about the implications of underground mining and the advantages environmentally against the backdrop of that battery passport. However, we're also going to be using those renewable energies and seeking to move forward, like many in the industry, to electrify our underground fleet. In Q4 last year, we signed an MOU with global leading ThyssenKrupp to use green hydrogen to power our rotary kiln. And that is the large emitter component of our project, or any project using natural gas. So this will be a major development for the project and have major implications globally. In terms of other factors that impact our carbon footprint, we're processing our feedstock on site. We're not moving a beneficiated product to concentrate halfway around the world for processing in other markets. Strategically, it's retained in Spain for the development of a lithium-ion battery value chain, but also we're moving at 1.5 kilometres for processing. This is an integrated project from start to finish. Also, our proximity to end markets allow for road and rail transportation of the end product, again with a much lower carbon footprint than existing sources of battery-grade lithium. So our renewable energy alignment here, it's of course very important politically, socially, and against the backdrop of that battery passport to be essentially chiseling away every possible CO2 tonne against your end product. So from where we sit, we've highlighted the major emitting components, and we envisage aligning other projects through JV or partnerships to provide that photovoltaic power and green hydrogen to power our project moving forward. Societally, we've been in and out of Spain now a few times in the new year and also through to Brussels. We're really focused on aligning this project to the local community. We've implemented training and development programs, and we've benefited and announced over the last few weeks the introduction of the EIT NL Energy battery development program. So we're really putting Caceres on the map, and they have the opportunity to benefit and be first movers in green hydrogen and lithium-ion battery development skill sets. Politically, Spain really wants to be a relevant player in this space, and across all levels of government, it's really a race on now to capture that value throughout Europe. So locally, we've been working with the rebranding of our company, Extremadura New Energies, our wholly owned subsidiary, is not only aligned to the raw material and the lithium chemical conversion, but also the strong alignment, which is critical for end users through green hydrogen and those renewable energies. We continue to build our Spanish executive team led by Ramon Jimenez Serrano, and we'd expect to continue to announce some major appointments over the coming months. We're expanding our partnerships with local business groups. We've signed an agreement with the CEC Business Circle that represents 5,000 businesses in a town of 80,000 people. It's really essential that the local community is upskilled and those opportunities commercially aligned to the community of Caceres and Extremadura. We've also announced agreements with CAREX, the mobility cluster of Caceres and Loibra, which is in Extremadura, to benefit from these training and development programs. So they are well underway, and we're seeing a rapid shift socially to support the project. So just quickly on the European story, I think we can all accept there's going to be significant demand for battery-grade lithium chemicals in Europe. And the driving force behind this is Vice President of the European Commission, Mr. Maros Šefčovič, who I met with in Brussels in February this year. They're now really focused after some significant success through OEMs committing to electrification and more than 1,000 gigawatt hours of lithium-ion battery plants in the pipeline by 2030 to now focus on where the critical risk areas, and that is the need for critical raw materials, refining capacity, and most importantly, skills. Just quickly to fly through some of the takes through the European Battery Alliance, they're focusing on identifying strategic projects such as ours. We're clearly at the forefront of that, and assisting in accelerating and streamlining permitting processes in line with the strictest environmental credentials. So not only are we bound by that in Spain and Europe, ethically and morally we're working with the local community, but this is also against the backdrop of a battery passport for an advantaged and lower carbon footprint end product. There's been significant announcements for funding initiatives through the EU Green Deal, but also more recently a 400 million euro commitment through a sustainable battery materials fund. I'll spare you the hockey stick graphs on pricing and obviously thematics in and around Europe. But just before we wrap up, I'd like to highlight we've announced this week some progression with Infinity Green Tech. We're launching a new and innovative lithium processing technique. It's more environmentally friendly, there's lower capex, it's much faster and uses a lot less energy and can benefit from localized sources of energy such as photovoltaic and wind. So we see an enormous opportunity here to access lower grade resources globally and contribute greater volume into supply for what is clearly going to be a major supply deficiency over the coming decades. So look, really just to note that we see the potential for this sustainable process to integrate other resources globally, and as a company, we remain entirely focused on our position within the European market. Thanks again for the opportunity to present today. Thanks, Chrissy.
Brilliant timing, Ryan. You get a gold star at the end of the day, down to 2 seconds to go. You did a brilliant job. We have 2 more presentations for us to ingest, take in before we go outside to enjoy some soft drinks or some harder drinks if you wish. It's completely up to you, but I can guarantee you that we will not run out. Who stayed yesterday? Yes, did you roll home literally and not from the alcohol? It was from the food. I nearly rolled upstairs. It was absolutely superb. Stewie's got us in the best place for food and drinks, that's for sure. We've got 2 really good presentations to share with you. One is from one of my favourite groups. But as you know, being an old Kalgoorlie girl, the Middle Island Fishing Group was a bit of a favourite of mine. There's a mining company named after said group. And Mr. Brad Marwood is the Executive Director of the Middle Island Resources Ltd. Middle Island Resources is one of the first movers, and why wouldn't they be, in the highly prospective but underexplored Barkly region of the Northern Territory. Brad is here to present MDI's fully funded plans for the up-and-coming field season on its Barkly Copper Gold Super project. Write that word super. So,
thanks, Chrissy. Good afternoon. Thanks for staying with us this afternoon. Okay, so on our website, you'll find the details of our cautionary notes and forward-looking statements. Firstly, I'd like to just say that we've recently completed the restructuring of the business, selling the gold assets, which has provided 6 million in cash and 6 million in shares of Oromon. We think we have a bit of a windfall there in that Oromon now has 900,000 ounces of gold, and they've recently announced Lithium, the discovery in pegmatites at their Palmer project, which I think gives them a brightness of future in terms of share price. And as we own 25% of the company, I think that could go well for us. Market EV around about $6 million. Okay, Barkly, Tablelands, infrastructure. Does look a little bit shy on infrastructure, but a good sealed road. We're only 13 kilometres away from excellent facilities at the Barkly Roadhouse, accommodation, meals, power, water, and so forth. And our concessions cross both sides of the Barkly Highway. So quite an exciting territory. There's a gas pipeline that runs very close to our concession holding as well. Not yet, but in the future that could well be of significant interest. So an oasis, as you see here. The Barkly Homestead and Mount Isa. Mount Isa is about 4 hours drive from where we are to the east, and Tennant Creek's a couple of hours to the west. The concession area, near neighbours, can you read that? Probably not. Maybe if the dark blue, Newcrest, the green, Rio, Greenvale, yellow, Emerson. Sorry, the green here is Emerson, the yellow is Inca. We have excellent neighbours, and we have a good communication base with all of these groups, as we're all learning from a base very little information other than that which was provided in 2016 by the Australian geoscientists, and they provided significant interest in the territory. We now have 175,000 square kilometres of ground being picked up. That's 2.5 times the size of Tasmania, by various companies looking for the potential for IOCG discovery and, well, the prospectivity. Let's have a look at that. Okay, so our holding is about 5% of Tasmania, 5,500 square kilometres. We have on our ground significant nearology. For instance, Emerson up here, a recent hole drilled within 1 kilometre of the boundary of our concession, 117 metres at a 3.34% copper and just under 1 gram per tonne of gold. Over here, where our Crosswinds primary target is located, Inca have been drilling adjacent to that, and on the other side, the Grenvale group have been drilling adjacent to our primary target. Let's move along and have a look at what I'm referring to. Okay, Crosswinds. We went out there, Rick Yates, my predecessor, and Bo York, who I think is in the auditorium, our principal consulting geologist, went out and spent a week up on the ground, driving out past the roadhouse, 13 kilometres beyond that, a sign that said crosswinds. And lo and behold, they saw a road cut, and in that road cut there was what looked like extra green colour of in the soil, and it turned out to be malachite at the surface. This is fundamental in the current knowledge of the type of genesis that we're talking about for the territory. We consider it to be a proof of process, sorry, let me go back, a proof of concept for the form of mineralisation. Malachite at the surface, fed from feeders. We know that the system has got pyrites and has had hydrothermal injection, and what we didn't know is whether there was any copper or valuable minerals. This tells us that we have valuable minerals present in the system, and that is quite exciting for us moving forward. So as a result of that work, under the stewardship of our principal consultant, we started with doing ground IP, one line along the edge of the road. So, you know, sort of head frame geology at its worst. And what we did was we identified from the crosswind surface presentation a signature of significant conductivity. We subsequently have completed 25 line kilometres of IP work. We're waiting on those results. They should be out before the end of this month. We have also completed ground gravity. Ground gravity identified more dense mineralisation areas, and the two go hand in hand for providing us with further evidence of mineralisation. And of course, when you're going to drill a hole that's upwards of 500 metres to hit the target and then drill another 750 metres, a $500,000 hole, you want to get it in the right place. So that's why we've slowed down our expectations of drilling and moved into the second quarter from first quarter to ensure that we are drilling in the right place, or the best possible knowledge that we can have for drilling of that deposit. Okay, so the ground IP work has been completed, as I say, 24 line kilometres plus one that we've already done, 25 line kilometres, 200 metre dipoles, gives us high accuracy, and that was completed middle of April. The ground gravity work similarly was completed a little earlier in April, and we are awaiting the final results of that work to come back to us. Okay, in December, we commenced doing the airborne geophysics, 40,000 kilometres. Okay, so no, I haven't made a mistake, twice around the planet. We have 5,500 square kilometres of ground, and we do lines every kilometre apart, and it's 40,000 kilometres. We've got about 28,000 kilometres to do to finish that work. When we have that, it'll be a first strike target generator. Our near neighbours, the chaps over at Inca have done their work and got their results, and they've generated on 3,500 square kilometres in excess of 40 targets. On the other side, Grenville have in excess of 57 targets. So when you look at doing IP and gravity work on each of those targets in sequence from priority, we have a big scope of works in front of us to meet our requirements. Okay, so I think the general understanding of IOCG within the geological fraternity is of course probably something I don't need to talk to, but what I wanted to do with this plate was really talk to those that perhaps are associated industry. The sort of generation that we're talking about is quite possibly Olympic dam style, where we're seeing a basement sediment overlaid, where we have the ground falling and faulting away, and then have a pluton delivering mineral-rich rocks into the structure, or alternatively, perhaps a vein structure style of mineralisation. either way, there is potential for very significant deposition of mineralisation, and the thinking is that we're probably looking at something like 15 to 16 kilometres underground into the mantle where the heat source is generated, and with erosion over the eons, we have seen these rise to the surface. And as you can see there, we've got a few examples of very significant mineralisation that occurs. That's the sort of elephant territory that we're talking about on this ground. And that's pretty much all I wanted to just cover off today, other than to say that we're going to commence drilling at the end of this month, probably a couple of months before we get assays. And we think we're at the sharp end of the value curve. And, I commend the prospectivity to you. Cheers.
Cheers, Brad. Thank you very much. It's short and sweet and to the point. And we can come have a beer with you and talk more about it when we get outside. That's the idea, isn't it? Sean Newbury, just sneaking behind me. There you go. So this is a little bit of a different presentation for the end of the day here. We've had our explorers and our producers for you. And this team fits in to our explorers and our producers, because we're talking about how this particular organisation partners with our explorers and our producers and emerging companies to make their lives easier. And by doing that, they subsequently, I sound like I've been outside having a beer already, and subsequently your investment profits can be bigger in the long run. So we're talking with Executive General Manager of Australia at this, Sean Newbury. He's going to talk about the success in partnering with clients in the metals industry from activation all the way through to expansion. Good to see more of you coming into the back there. They've delivered mining excellence to clients for more than 85 years with a really strong reputation for mobilising quickly and supporting client growth. Would you please make Sean very welcome? And at the end, he'd love to take any questions if you have any. Thank you.
Thank you, Chrissy, for the introduction, and good afternoon to all. I just thought I'd start off by saying thank you to everybody for sticking it out, for the grit and determination, the graveyard shift, as they call it. So thank you for that. And I also acknowledge that I'm pretty much the only person standing between you and freedom after a long and very exciting day. So I'll try and be as brief and to the point as possible. It is, however, odd that the presentations today started off with a Sean opening the presentations, and it's closing with yet another Sean. But during the day, I was told to be careful. He's far better looking than I. But in my defense, I'll put it to you that his name is spelt incorrectly, and we just need to inform him of that at some point. On a serious note, though, I just want to say how excited we are to be here as TIS, and to my colleagues that have joined me in the last day and will certainly be here tomorrow. Just within the context of what the country has endured in the last 2 to 3 years, ranging from drought to floods, and certainly COVID and all that has come along with COVID, both the good and the bad. Isn't it just refreshing to be around the buzz and excitement of what we're hearing today? Sean Russo from Knows Rules spoke earlier this morning. He opened up and he spoke about the buoyant and exciting nature and times that lay ahead of the resources sector. And certainly this is tangible and very exciting to feel and to be part of. So thank you to everybody. Just a bit about TIS. TIS is a pioneering resources solutions company. And I know that many here will know of the brand TIS, but we deliver and provide our best services when we collaborate and partner with clients. We do this throughout the full mining lifecycle. We deliver a range of services from mining engineering and the full remit in technical services, mineral extraction, asset management, and rehabilitation. And we have been doing this for the last 85 years. Our values are not dissimilar to most other companies in the resources sector, with integrity, accountability, innovation, and delivery, all naturally underpinned by safety. But at TIS, we live these values each and every day. We do operate internationally and have done so for decades. And whilst we have made our name in the coal mining industry, we have a strong mineral CV. And we have also committed and have been committed to partnering with emerging minerals players as a significant part of our business into the future. And our presence here and engagement should give signal to the fact that we really do want to partner with emerging extractors. If we are going to do that, though, we do know that we have to be flexible. We need to be nimble and we need to be scalable. Our contemporary services and expertise lay in mining extraction, mining engineering, asset management, and rehabilitation, all of which we believe very strongly are underpinned by proven environmental, social, and governance processes. And we are proud of them. And this has been developed in large-scale coal mining and other minerals projects around the globe. This has not come by luck. We have been very intentional in investing heavily in capturing skills and learnings so that we are nimble enough to offer great services to smaller and emerging minerals extractors. And our presence here is seeking that out, seeking those engagements and seeking those partnerships. TC is not far from 100 years old, and its roots are in small-scale operations, whether it be in mining, civils, or construction. And I'm sure many here will know the pioneering spirit and passion of innovation of the legendary Tees brothers, which live on to this day in how we work and how we think and how we service partners and collaborate. Our size and experience means that we have and are bankable partners and can offer certainty of delivery, but we are also committed to flexible solutions. And I'm happy to have a conversation with any partner where it involves ingenuity, a different approach, a smarter approach that requires genuine partnership. Let me just give you a couple of examples of what I'm speaking about. Starting off with covalent lithium at Mount Holland in WA. The ready availability of equipment meant we were nimble enough to mobilize assets and skilled personnel to get first dirt dug in a matter of 2 months. In quick order, we were also able to assure our clients and our partners that our systems of health and safety, environment, people and capability, and others are proven and robust, and that we value and are focused on ESG, diversity and inclusion, and Indigenous partnership in business, and that this was as important to us as it is to them. We also did this whilst COVID was on its peak and the borders were open, and we had a number of other hurdles, but we offered a dedicated team of professionals focused on delivery, and we delivered. The next example, and proudly spoken of this morning by Dan Jauncey of Austral Resources. In a similar fashion, we provided a pathway and an access way with our partners to delivering ore within 4 months. We understand that speed is critical for an emerging player. The photos behind me will show how quickly we went from really open earth to an open mining operation, as Dan proudly speaks about in his presentations. But we're also a bankable, and we are a bankable partner that can deliver reliable services through our systems, our processes, and our governance. And importantly, we can have these systems present, available, and operating at the push of a button. The differentiator with this opportunity, we do believe, is the early engagement with Austral's executive director in Dan Jauncey. And this led to the creation of a genuine partnership. And I'm sure that Austral is as happy with the progress being made at the operation as what we are. And it's something we want to do more of. We want effective partnerships through early engagement and, more importantly, sincere collaboration. So whilst there's a lot more I'd really love to cover with you today, without boring you, and I know that I'm between you and a couple of drinks, I just want to leave you with 2 comments regarding environmental responsibility and mine rehabilitation. TC is at the forefront of a number of sustainability initiatives, and 2 that I'd like to cover off with you today, just very briefly, are around dual fuel technology and our newly launched TC rehabilitation business. These are dear to us. And whilst many of the opportunities presented in the last 2 days do speak very creatively to the pathway of creating greener energy solutions, TEES has partnered with MES to enable the provision of dual fuel solutions in mining trucks that enable them to substitute up to 80% of the current diesel burn with natural gas, whilst providing the same torque currently delivered through diesel solutions. This technology is non-intrusive to the original engine and truck footprint and is agnostic to engine manufacturer. The substitution of 80% of the diesel with natural gas enables a reduction of north of 25% of greenhouse gases and the emissions, and 80% reduction in diesel particulate matter by a cleaner, more efficient use of natural gas. This, however, is the first step that will allow us to offer our partners a solution to reduce carbon emissions from the original and our embedded mining fleet, whilst new technology is developed and introduced. And we've heard many of the extractors and new entrants speaking about these commodities that are very significant and heavily needed in the future, in the medium term, for the greener use of energy and the solutions that are underway. In terms of our rehabilitation, TEES has launched a new standalone rehabilitation business to the market. Strangely enough, it's called TEES Rehabilitation. Having delivered award-winning rehabilitation programs globally, and with over 10,000 hectares of rehabilitation completed since 2007, TEES is well positioned to offer world-leading mine rehabilitation services. Our rehabilitation covers the full life cycle of mine rehabilitation services, from design to development to delivery, including helping clients achieve superior end land use results with positive environmental and social as well as governance outcomes. The key differentiator, we believe, is our ability to optimize inputs and outcomes, from optimizing rehabilitation planning and designs and operational schedules, to identifying efficiency gains and equipment utilization options, as well as seeking alternative mine design and plan options, from cradle to grave, where we are in that partnership, to work with clients on developing that full life cycle solution. We have a notable advantage in our technical ability and expertise in planning and optimizing rehabilitation designs. We have done this for many, many years and delivered, as I've said, award-winning global achievements for rehabilitation. Through our landform design optimization software, which we have developed quite significantly, we are able to lower the cost of construction through upfront design optimization. And these results have been remarkable within our current operations, where we are delivering these services, with a saving of up to 30% reduction in bulk material movement to create an end land use state which is compliant and useful. We've also done this through enabling or investing in enabling technologies, two of which, very briefly, is our drone technology, which creates very precise precision survey as opposed to manual survey methodologies, which is real-time data and allows us to integrate that with another piece of technology which we have developed over several years and put to work at our Lake Vermont operations, which is SAT, semi-autonomous tractor solutions for dozer push. These combined give us a differentiating competitive advantage that we believe we can add significant value to our clients and our partners. I'll close off very briefly, because all of this really leads to one thing: better time and cost efficiency, which is immediate, reduced risk, and clearly visible social value. There's a lot of good material on our website, and I'd encourage you to visit that and take a look at that at drinks afterwards, and with the team that will be here tomorrow. Please engage us and have a chat with us about that. Very keen to hear if you have any questions or suggestions. So with that said, Chrissy, thank you.
Sean, thank you. Sean Newby, Executive General Manager. Can I ask you a question? A first-time sponsor
Yes.
of the event. What drove you to do that? Why did you come on board as a sponsor this year?
Well, I think, Chrissy, in the presentation, I was trying to elaborate. I think TEES, and we must take account for the perceptions created, has a perception that we only play in the big end of town. that we're coal-centric. This is not the case. And us participating in such events is clearly putting our name out there to be able to engage and have collaboration with smaller entrants around the value that we can bring to your projects and to your dreams.
Thank you very much. Sure. Did anyone else have any questions they wanted to ask Sean, perhaps about the clean green machinery, etc., being touted by some of our other explorers and producers? You want to ask him over a beer? You are asking him over a beer. They want to ask you over a beer, sir, or a wine, or some food. Is that all right?
That's perfect. Thank you.
Okay, would you put your hands together for Sean? Before you leave me today, a couple of things to say to you. I hope you've had a good time, first of all. May the 4th be with you. It's that special day of the year, and we almost overlooked it, but I was thinking about that. May the 4th. This day, all the way back in 1978, was when that first Star Wars movie came out, and the title of it, the working title was A New Hope. I was thinking that's a bit like us today, isn't it? We've got a new hope with all the potential that we could be investing in and making money and going well. So new hope to us. Go out there, have a drink, and I look forward to seeing you back here for day 3. Enjoy, everyone. Thank you so much.